Hey everyone, I'm David Collins. Welcome back to the channel. If you've been watching the markets lately, you can probably feel it. We're at a pretty delicate turning point right now. So today, I want to break down what's really happening, where the structure sits, and a few stocks that are standing out in this environment. The Dow closed up about 200 points today. After the court reviewed a major trade-related case, AMD helped trigger a rebound in AI stocks. But honestly, I think the move was a bit overhyped. Yes, AMD had a nice bullish engulfing candle after yesterday's red doji, but overall, the stock is still in a pullback. Meanwhile, Nvidia had a pretty ugly intraday drop, making new lows compared to both today and the previous session. So the market's still sitting in a danger zone, a stress test phase that could easily turn into a correction. Now, I want to take you into the SPY chart, that's the S&P 500 ETF, and show you what's called an island reversal pattern, and what it could tell us about how far this pullback might go. I'll also give you a few key support levels. Why are these levels important? Because they're potential bounce zones. If we get a clean rebound from one of them, that could open the door for another leg higher. But if price breaks straight through those levels, then we're likely heading down to test the next area of support. So today, I'll give you 3 important zones to watch on the SPY. Now, big tech had a mixed day. Some winners, some losers. Google and Tesla moved higher, while Microsoft and Nvidia continued to roll over. A lot of people have been asking me, hey, is it time to get back into Meta? And my honest answer is, not yet. There's still some risk in that water, so stay cautious. I'll show you what I'm looking at with Meta in just a minute. I don't have a fresh November pick today, but I do have one hot stock that I believe could push higher tomorrow. I'll give you my target and explain why it's what I call an outlier. Now, what's an outlier? It's a stock that goes against the flow. When the market's pulling back and most risk assets are dropping, this one breaks out with a strong green candle. That's the kind of setup I love, because when the broader market turns bullish again, these outliers can often run way further than the rest. So I'll show you a new name today, one we haven't covered before, but it's been making noise and showing real strength. I know some of you already hold it, because it's been a popular ticker lately. It broke out big today, and I've only got one small condition on the chart that needs to be met for me to buy it tomorrow. It's a simple one, and I think it'll easily get there. This thing looks ready to keep climbing. Now, before we go deeper, let me quickly run through my trading disciplines, especially for those of you who are new here. Rule 1, trade with the trend. The macro trend is still bullish. We haven't broken down below major moving averages yet, but the short-term trend is clearly a pullback. Rule 2, always use a stop loss. Every stock I talk about has a stop loss plan. You'll see it on the charts when I show them. And if a stock doesn't keep moving up over the next few weeks, that usually means I've already stopped out and moved on. Rule 3, control your position size. This is one of the oldest lessons in the game. People hear a great story, a new technology, a new innovation, and they go all in. But a lot of these next big thing companies don't even have real revenue yet, so they end up diluting shares just to raise cash. That's why you have to keep your size under control. For me, it's simple. Smaller caps, smaller positions. Keep most of your capital in long-term plays, because time in the market always beats timing the market. Rule 4, don't overtrade. Don't revenge trade. You can't fix a bad trade by taking bigger risks. These principles have worked for me, and for a lot of people who followed my journey. Sometimes it's not even about the trade itself, it's about the plan, the discipline, the patience, and of course the charts, because charts don't lie. Price is truth. Alright, let's talk about the SPY. There are 2 big things I want to highlight today, an island reversal and an ascending channel. Now, ascending channels usually break down, roughly 80% of the time. When price runs too high within the channel, eventually gravity kicks in. Right now, we're still inside that channel. We recently tested the top, and it looks like we're heading back to test the bottom. If it holds, the bull story continues into year-end. If not, we're looking at a deeper correction. I always say, the top half of a channel belongs to the bulls, and the bottom half to the bears. This market's mostly been bull-driven, with short dips that quickly recover. That's why the theme for 2025 still feels like buy the dip. But this time, we're spotting an island reversal. What's that? It's when price gaps up at the top of a rally, forms a little cluster of candles, then gaps back down, leaving that tiny cluster all alone, like an island. That's a bearish signal, especially near the top of a move. So yeah, the stakes are high right now. Let's take a look at the chart. We're still in that long-term upward channel. If you look at the volume profile on the right, you'll notice the thicker bars. Those mark strong support zones. There's a chance, a small one, that we might bounce around 672. If we don't, the next support sits near 662. And below that, 653. That's the line in the sand. I expect small bounces at each level, but I doubt they'll hold for long. Eventually, we may retest that 653 zone. Now, I'm not seeing panic selling, but the market doesn't have a strong reason to blast higher either. After the steady climb we've had since spring, a lot of traders are locking in profits just in case things get choppy again. The next big catalyst will likely be Nvidia's earnings, but I'm not convinced it'll be enough to sustain the current move. We still need to test a few levels lower first. Alright, let's talk about Meta. I'm not telling anyone what to buy or sell, but personally, I don't want to miss the turnaround story here. I think Meta will still be a winner in 2026 and beyond. My buddy Money Mike said something smart in our live session today: never ignore a blue-chip stock trading below its 200-day moving average. And that's exactly where Meta is right now. Looking back, the last time it dropped under the 200-day was back in April, and it only stayed there for about 2 weeks before exploding higher from around $515 to almost $800. In other words, when a blue chip dips below the 200-day, you watch it closely. I've drawn a descending channel on the chart, and even though price is moving lower, these often flip bullish and break upward. Meta's sitting right in that buy zone now. If it reclaims the 200-day in the next month, it could easily start a new long-term uptrend. Historically, every time Meta has dipped under that moving average, it's been a great buying opportunity. There was one time it stayed below for about 6 weeks, then doubled from $155 to $300. That said, I think it's still early. Meta just slipped under the 200-day a few days ago, and it usually chops around for 4-6 weeks before breaking back above. So keep it on your radar, but don't rush in. Now, the last stock I want to highlight today, Lemonade, ticker LMND. Recent news shows Lemonade is on track for its highest close since September 2021. That's a structural breakout, a big shift in character. The stock's trading around $77 right now, and if it breaks above $79, that'll mark its highest close since back in 2021. It's up over 110% year-to-date and 166% from its 52-week low. The key point is this: while the market's been pulling back, Lemonade kept pushing higher, and that's exactly what we call an outlier. Instead of chasing big tech while it's still cooling off, look at the names showing strength right now. Tomorrow, I'm waiting for a small pullback to the Washington P, and if it bounces, I'm targeting the $86 range. The setup looks clean. No heavy selling after hours, just a tight sideways move. If we tap the Washington P and hold, this could run higher through the end of the week. That's my watch list play for now. Do your own research. This isn't financial advice. The market always carries risk. But right now, Lemonade looks like one of the most interesting stocks on my radar. I'll be watching closely for that small dip and bounce setup tomorrow. That's all for today's update. Stay sharp, stay disciplined, hit that like button, subscribe if you haven't yet, and I'll see you in the next video.